Hey guys, welcome back to another edition of the market preview. It's finally weekend, and based on the last video I see that you really enjoyed the lesson on Fibs. So I decided to prepare for you one more lesson. I decided to show you one more way of application of Fibs in trading for stop placement and for targets. And based on the analysis on dollar Swiss, I will show you how I apply Fibs for that. Also, we will discuss oil, and I will give you the update for oil, and we will discuss very common candlestick pattern that you should definitely learn to improve your technical analysis. Based on the pound cat chart, we will discuss this pattern, and I will show you how to recognize that and how to trade that. And finally, guys, I have a very important announcement for you, so please watch this video until the end because I have something interesting for you. So enjoy this video, don't forget to like it, don't forget to subscribe and share it with your friend because so much stuff here, guys. Enjoy! So we're gonna start our analysis with the dollar Swiss chart. As always, our analysis starts from the daily time frame, and on the daily time frame we are trying to get what's happening with the market right now, what's happening with the pair right now. So what is very interesting right here is the price action. So first we pay attention to price action, and what we see here, we analyze with you the impulses, we draw the impulses, the bearish legs, the bullish legs, and we just try to get what doesn't mean, if there is some logic behind what's happening right here. And as you can see, here we have the perfect example of the market contraction. So what do I mean by the contraction? Here goes our initial bearish impulse, and then if we analyze the length of the next impulse, you can see that it is shorter than the previous impulse. And if we then take the next impulse, once again it is shorter. So it is the perfect indicator that the market is contracting. It is the perfect indicator that we have here the indecision, the consolidation, and for now the market doesn't know where it will go next. And based on that, what we also can notice is that based on that contraction, the market is forming a very nice triangle formation. Yes, the very nice triangle, and in that triangle the pair is trading right now. What happened with the market on Friday? You can see that on Friday the market reached the resistance line of a triangle, and the reaction, the candlesticks, that this doji formation right here indicates that still this resistance is important for the market participants, and so why not to try to short from that. So now we go to lower time frame and check the situation there for confirmation. So now we switch to 4-hour chart. On 4-hour chart, here goes our last bullish impulse. And what is interesting about this bullish impulse, as you can see, we had a very strong bullish movement. We have a very nice sequence of the bullish candles, so many bullish candles in a row. And once this resistance was reached, once this structural resistance was reached, as you can see what happened, we see a very nice bearish engulfing candle, strong bearish candle, signifying that sellers are here, that they are willing to sell, and they clearly show us that they started to sell. So the candle clearly engulfed the last bullish candle. Yes, so very interesting. Now we switch even to the lower time frame and check what's happening on the lower time frame. So now I switch to the 1-hour chart, and on the 1-hour chart, what we see with you that even more details, even more details. And here we have with you the classic example of the double top formation, right? So you can see that the market tried to touch this resistance, it touched that and immediately retraced. Then bulls tried to do it again. They tried to retest the resistance and potentially to break above that, but once again they went rejected. And moreover, you can see that based on the bearish reaction this time, bears even broke below this minor structure support right here. They clearly broke below that and closed below that, signifying that yes, they are willing to sell, and the chances are high that now the market will start a bearish wave to the downside. So now let's discuss how to trade this setup. To properly trade this setup, what we are looking for right now, we are looking for the retest of the broken support. So next week, when the market will open, we will set the limit order, the sell limit order based on the retest of the broken structure here. And from here, we will short with you, anticipating the continuation to the downside. Obviously, our end goal will be this structure, will be this support of the triangle, but not to be greedy. To avoid a strong bullish reaction from here, I will set my end goal a bit higher. I really like this minor structure 96.6 level, yes, based on that structure right here, and I want to base my end goal based on that structure. But also I want to start protection of my profit earlier. So if I will be in that trade next week, I want to start the protection earlier. And Fibs will help a lot here. So how can we use Fibs here? We will take with you our last bullish impulse. Here is our last bullish impulse. And based on that, we will use the Fib retracement. We will draw the Fibs. And based on that, from swing low to swing high, we draw the Fibs. And as you can see here, I have the 0.5 level. Why I have this level? It gives us the half of that impulse. And you know, for market participants, half, the 50%, is a very important psychological number. So I prefer to start protection of my profits from that level. And also, if we draw the horizontal line based on that 50%, you can see that on the left we have a very nice match of that level. Yes, and in the past for the market participants, this level was important. So why not to close half of our profit on that 50 level, right? Now about the stop placement. It's a bit tricky about the stop placement here, because obviously based on my rules, I always set my stop above the tops. Yes, for the protection, I want my stop to lie above the tops, because not only it will lie above this horizontal resistance, it also will lie above the falling trend line of the triangle. So we have the double protection, setting our stop like that. But I know that as you are a newbie trader, for you it's quite hard to get what does it mean above the tops, because it is quite subjective. Above the tops can be just right here. Yes, it is also above the tops. So how to properly place that, how to avoid subjectivity, the grid, and how to place this stop objectively. For that, here I will show you a very simple concept that you can use trading each trading strategy. So here I want to pay attention to this retracements here. We will take that bullish retracement, and based on that we will use Fibs. We will take the Fib extension tool, and based on the swing low to swing high, we draw the Fibs. Yes, and here we will add with you the 1 to 72 level. As you can see, what I like about the 1 to 72 level, it is clearly above the tops. We have nice space between the tops and the 1 to 72 level. So you know, very nice. And no matter how big double top you trade, how big the pattern is, this technique will always give you the objective stop that you can always backtest, and that will clearly give you the stop above the tops, right? So we will place our stop based on the 1 to 72, and our position will look like that. And by the way, let me remove this 1414. Yes, so just 1 to 72, right? So here will be our entry for the trade, the retest of the minor structure. Yes, our stop will lie here, 1 to 72, and here will be our initial target. So just 1 to 1, just bigger than 1 to 1 risk to reward, and we will close half of profit based on that level. Then here goes our second target for the trade, and here we have around 2 to 1 risk to reward. So pretty nice risk to reward for the trade. We will risk 0.5% on that trade, and I think the potential to be involved in that trade is very high, and usually it is 60% accurate trading setup. So I really want you to trade that, or at least pay attention to that setup, because indeed chances are high that we can make money on that. So pay attention to dollar Swiss, pay attention, this is your trading plan, and remember, if the market just drops, if it just drops to the first target, we just cancel our order. So no need to keep our limit the entire week. If the market just drops without retest, we just cancel. We don't wait, we cancel once the market reaches the first target. Yes, quite simple rules, quite simple approach, so many details, but you can see that the logic is way simple right here. So let's see how it unfolds next week, and let's go and discuss the next financial instrument. So really a lot of questions about oil, and I truly understand why. Everyone wants to know what's gonna happen and whether the scenario of the last months will repeat or no. And yeah guys, very interesting. I don't know what's going to happen, but one thing that we know for sure is that our key structural resistance level is reached, our key daily structural resistance reached, and we are now trading within that. And in the last video I have explained why this structure is so important, and based on the Fib analysis I explained the significance of that level. So if you want to know why, watch the last video. I gave very nice explanation. Now our SI on the daily is already overbought. It is a very strong indicator, and very high chances that the market will drop from that, but still for now no signal. Pay attention next week to the lower time frame. Pay attention to the price action. You can see that right now the candlesticks are so weak. It clearly shows us that no one knows. Everyone is waiting for some trigger, for some fundamental news, for something that will clarify what's going to happen. So next week, your trading plan is to follow the market on 1 hour. On 1 hour, we will retest the structural high right now. Here is our current high. Most likely we will retest that. So your task is to pay attention to reaction. Pay attention to this market high. Maybe we will see some false breakout above. I am very bearish biased. I don't know what will happen, but if I see some reversal formation, like with the dollar Swiss, if I see some double top, or if I see the head and shoulders, I will definitely wait for some minor structure breakout to short. And remember that this here will give us a perfect chance to catch a big winner, big profit, but it can be caught only when we patiently wait. Now don't sell, now wait, be patient, be prepared. I hope that I will give some updates, and if we see some nice reaction next week, but for now, patience guys, just patience, and we will see the reaction on this daily resistance. So now we will discuss pound CAD chart, and on the pound CAD chart we will analyze with you daily time frame, and I will show you how it is important to pay attention to details, how it is important to pay attention to candlesticks. And here we have a very classic candlestick pattern that you should definitely learn, and that will help you a lot to trade technical analysis. So first of all, you can see that we had a very nice bearish rally, and then the market stopped on that level. It stopped on that level, and for the 5 days the market is coiling in sideways. You can see that we bounced up, retraced to the downside, and once again bounced up and then retraced to the downside. So just no movement at all. And our first task is to get why the market stopped here. So we take the horizontal line as always, and we just draw the horizontal line with you. We look left at structure, and you can easily notice that right now the pound CAD reached a key structure support, a key daily structure, and that is why the market stopped. Market participants right now are thinking whether they will break below that and go lower, or respect that structure and retrace to the upside. So now details. What I like about this pound CAD chart right now is that here we have with you perfect example of the inside bar formation, the classic candlestick formation. To identify that, we should pay attention to candles. As you can see here, we had our bearish rally to the downside, and then here goes our last bearish candle. What we do here, we take with you the range of that candle. We take the body of the candle and the wick of the candle. So here goes our range of that candle. And based on that, we draw the horizontal lines. We identify the resistance, the upper boundary of the range, and the support of the range, right? So here is our current range. And what is interesting, you can see that all next candles are perfectly trading within the range. So yes, we attempted to break the range, but we went rejected. All candle closes are within the range of so-called mother's bar, and this is the classic moment of the indecision. It clearly signifies indecision, and for now some trigger is missing. And I think probably that for the pound cat pair, the trigger is oil prices. So now oil on the key levels, so market participants are waiting for the reaction to decide where they will go next. So based on that, we wait for the daily candle close below or above the range of the mother's bar. Once we see the daily candle close above the range, it most likely shows us the future direction of the pair. So if the candle closes to the upside, then we expect with you the further continuation to the next structure, to the next structural resistance, yes, based on the daily structure. And same thing with the bearish continuation. If we see the daily candle close below the range of the mother's bar, then for us it signifies that the pair will go lower, that it will go lower to the next structure support, right? And more you see that pattern, more clearly you identify the moments of indecision, right? And pay attention that inside bars should be strictly formed on the key level. So we consider them only when they formed on the key level. If they just formed in the middle of nowhere, we try to neglect them because quite often they give false signals. But once the inside bar formed on the key daily structure, then we definitely should pay attention to that. And moreover, let me show you one thing on the lower time frame. So now I'm on the 4-hour chart, and on the 4-hour chart, and if we take away our drawings and just draw the range of the mother's bar, why it is important for us? It gives us local strong resistance and support levels. So for now, if you trade intraday, for you the support of the mother's bar give a perfect support for buying the market, and at the same time the resistance of the mother's bar gives you the perfect place to short from. And as you can see, just based on that, you could have so many trading opportunities to buy from support and short from resistance. So it's just quick trades, quick winners that we can take just based on that range. So it's definitely important for us to recognize, to learn this pattern, because based just on this simple pattern, so many different strategies can be applied. Trading within the day, trading on the higher time frame, the swing trading based on the breakout of the mother's bar. So many approaches. So I want you to learn this pattern. I want you to backtest. I want you to learn how to recognize that, and I'm sure it will dramatically improve your technical analysis, right? So now let me tell you something. So the YouTube channel is growing very, very fast, and I see that you truly watch my videos. I see the statistics, I see that you like it, I see that you enjoy that, and I really see that it is important for you. It's great that you learn, and I appreciate that. I think that after the publication of that video, the channel will reach 1,000 subscribers, and it's just enormous, I believe. So for that reason, I decided to make a very big discount for all my YouTube subscribers, and only for my YouTube subscribers. So text me in social networks. The links are in the description below, and you will get a very big discount on my premium educational group. So if you like my videos, you will get even more. I recorded more than 15 hours of educational content, the examples of trades, risk management, education on different technical tools, structure analysis, so much stuff for you to learn. And I truly believe that if you like these videos, you will definitely enjoy and you will definitely like what I record for my students. So become my student. I really want you to become my student. I really want to educate you. So just text me, contact me, and I will share with you more details. So discount is only for the YouTube subscribers. So don't miss that chance and contact me.